So today we're going to talk about the vertical stacking and how we actually stack credit cards. So it is a way that we can have multiple, not charges, but multiple inquiries by having one inquiry at the same time. So we're going to go over that, go over how we can do it, the actual methods on that. Now, before we get started, so kind of two just kind of housekeeping items that have really nothing to do with credit cards per se, but from an informational standpoint, because I am a certified financial planner, so it's going to be blessed. So from a stock market standpoint, yes, today the stock market's up, but the stock market over the past 5 weeks have been down. And for the Dow Jones, it has been down for the 4 straight weeks, the first time in 3 years that it went down for 4 straight weeks. This happens with my background still, okay, forget about the background. But from an investment standpoint, over a 12-month time period, the stock market goes up by 8 months. The stock market goes down by 4 months. So this happens. Unfortunately, we don't know when it's going to go down. For our clients, we moved a nice amount of their money into cash about 4 weeks ago. They move everything into cash, but it just kind of shows even when you think the market's going to go down, we don't know how far it's going to go down and for how long. I personally believe by June or July, the market should be back to where it was in early February before it started going down. So from a investment standpoint, do we stay in the market or do we sell? Well, look at it like a house. If I have a house that today, let's say, is worth $300,000, I sell that house. And then 6 months later, when things are back to normal, I buy that house again. And when it's worth 500,000, I lost money, right? Or if it's a stock, if I sell a stock today, that's at $30. And when things get back to normal 6 months from now, I buy that stock again at $50, I've lost money. I've actually lost money two different ways. I lost, it may have went down. So if I sell something at a lower price, but then also I lost money because when I buy it back, to buy one piece of that stock, it doesn't cost me $30 anymore. And now it costs me $50. For those reasons, if we're a long-term investor, if we hope our money, it's going to continue to grow and we want our money to grow in our account for a year or more, strongly recommend staying as is. Yes, the politics are the politics, the president's the president, and all the other stuff that's going on across the world is crazy, but this has happened before. The market's going to go down again 2 or 3 more times this year, like it happens. But over a 12-month time period, if we look at it where the market goes up by 8 times or 8 months and the market goes down by 4 months, we look at it that way, this happens. That's number one. Number two, I'm not saying a recession is going to happen. So I'm not saying, hey, you guys, let's get all our Roman noodles. Let's hunker down. I'm not saying a recession is going to happen. However, just from a planning standpoint, I would strongly recommend everybody, literally everybody's called, own a house, to do a home equity loan. So a HELOC, not a loan, but a HELOC, a home equity line of credit. The reason why is because when it is a recession, banks tighten their lending usually by about 60%. Meaning over the course of a day, if they was going to loan to 10 people, for every 10 people, they would loan to 10 people. When a recession, they loan to about 4 people. And that's statistically, right? The reason why is because they like to kind of hoard their money. Even though it's your money, you put into the bank. If you want to do a home equity line of credit, they're a lot more strenuous and they just don't really loan money during recessions. But if you have a line of credit today, they can't take that away from you. So if you do a line of credit, and I'm not saying use the money, right? So if you have $70,000 of equity on your house and the bank gives you $40,000 of a line of credit, just have it. Now, most banks charge in between $50 to $100 a year to have it. So yes, it will cost you, $50 or $100. But over the next 6 months to 18 months, if you plan on doing any remodeling or you plan on kind of taking money or borrowing against your house, by you having that home equity line of credit or that HELOC set up today, that just helps you dramatically compared to 6 months from now, 12 months from now, or 18 months from now. If we do have a recession, not saying we are, but if we do have a recession, that allows you to kind of have that, because once you have it at the bank, they can't take it away from you. So strongly recommend everybody on the call, go to the bank or your credit union, establish a home equity loan line of credit. So a HELOC, what people call it, home equity line of credit. Establish that. Don't take out any money. So I'm not saying do remodeling and do anything of that nature. What I'm saying is just to have it. So if you have to use it for whatever the case may be, it's there compared to 6 months or a year from now. If it's a recession, you're able to then have it already established. So you don't have to go through the hoops of the bank saying no to you. So that's some housekeeping items. So now the vertical credit card method and maximizing approvals with minimal impact. Because we want to take advantage of credit. Now, we don't want to blow our credit. We want to take advantage of credit, but how can we do that? Because we talked about the utilization rate before. And with the utilization rate, it allows us to have multiple credit cards, but not put as much of a balance on each card so that it actually looks good. So it's like a myth that if we have more than 3 credit cards, that's a bad thing. That's just a total myth, and that's just not true. The more credit cards you have, actually, the better if we have small balances on each card and they're being paid down and paid off. But what is the vertical credit card method, right? So instead of applying for multiple cards from the same bank, which is a huge no-no, which will cause multiple inquiries on one report, you spread your applications across different banks that pull from different bureaus, right? We have Equifax, Experience, TransUnion, and different banks pull through those different agencies, which we'll talk about here shortly. But if we want to get a credit card, we recommend not getting one credit card. You want to get multiple credit cards. And even though it's a high or low, in some cases, credit limit, we want to kind of have that utilization at 30% or lower, which we'll talk about here, to actually help your FICO score. So you getting multiple credit cards is actually a good thing, not a bad thing. Me personally, I have like 12 credit cards. And anytime I want to do like a business deal or like an investment deal, I actually get another credit card with 0% interest. We'll pull the money off the card. We'll talk about that 2 weeks from now, how to actually take money off of a credit card legally, not like illegally, but like legally take money off a card from a cash standpoint without doing cash balance or a cash balance transfer, which is like a 5 or 10% fee that they'll charge. So there's ways to pull money off of cards that we'll talk about. But yeah, multiple credit cards is actually a good thing, not a bad thing if you're structuring property. Now, if you're blowing through all the money and you're just spending like it's 1999, then that's different. But if you're just paying your bills, doing the same thing you're doing now on your credit cards and then paying them off, that has helps your FICO score dramatically. This means that you only get one hard pull per bureau while getting approved. So when you get approval, they do a hard pull, right? But if we're doing it at multiple banks within the same agency, that only helps, which we'll talk about. And it works best when you do it on the same day. Now, that's kind of tedious because the bureaus basically check every 30 to 90 days. So you can really do it within a 30-day time period and be okay. But, if you really kind of want to make sure that it's only one pool, then you want to do that the same day. But you really have up to 30 days before the inquiries get reflected. All right. So we're going to go step by step on how to apply using this vertical credit card method, right? So first off, we want to check your credit profile. So as we talked about before, you want to make sure that you have at least a 700 credit score or above. Anything below 700 would not recommend that you go through the process of doing this credit stacking. So if we have $700 or lower, we want to build our credit. And the quickest way to build our credit, as I said, is the credit cards that you guys have now, not any new credit cards, but the credit cards that you guys have now, putting money in those cards, no more than 30% on each card. So they have a $10,000 credit limit, no more than $3,000 on that card. But putting things on that card, and as I said before, setting it up where every single week it gets paid off. If I have we're in Jacksonville, I have a JEA bill that's $400. Put that JEA bill on my credit card on Monday, and on Friday it's automatically paid off. Well, two things happen. I make a payment towards something that boosts my FICO score by 1%, and I pay off the card, and that boosts my FICO score, by 1 point, and I pay off the card, that boosts my FICO score by 1 or 2 points. So if I do this over a basically 3-month time period, and let's say I have 30 different bills I put on those 3 different credit cards, that's going to boost my FICO score anywhere between 80 to 150 points, depending on how much I put on the card, when I pay it off and how many cards I have. So once we get to the 720, that's when we are in the driver's seat, right? 720 is deemed as a good credit score. That's when you get the 0% credit card offers coming your way. That's when you get the higher credit limits. So anytime we want to do like the credit stacking to get more credit to do things from an investment standpoint or just to kind of have more credit cards, we don't want to go through the process until we have a credit score which is 720 or more. We have Experian, TransUnion, Equifax reports it, Credit Karma, MyFICO, or AnnualCreditReport.com. In my humble opinion, I would say use either MyFICO or AnnualCreditReport.com, because with Experian, TransUnion, and Equifax, it's just them, right? Like they really don't talk to each other. Like, so kind of find out what your credit score is, either MyFICO or AnnualCreditReport.com. Also, you want to ensure there's no recent denials or fraud alerts that could trigger auto rejections. We use LifeLock. So I personally, me and my wife, we use LifeLock. So if anybody ever steals, it's like $9 a month. So it's not the most expensive thing in the world. But if anybody like tries to steal like credit or gets anything, we get emails, we get text messages, calls. So I would definitely say use that. Now, the bad thing about that is that if you do, run your credit, then it might get blocked the first time. So if you go through the process where you're trying to get more credit cards, then you definitely want to alert, in my case, LifeLock, that, hey, I'm about to apply for a credit card. And can you turn off my monitor for a week or 2 weeks? So yeah. And as more people are popping in, my co-host, you guys can let people in. See time, I guess. All right. So yeah, so that's what we want to use there. So we are going to go over each agency and who gets reported to them. So Experian, and it's more than these five, but these are basically the major players. So Experian, they get reported by Chase, and that's JP Morgan Chase and Chase Sapphire, because JP Morgan Chase, the bank, JP Morgan Chase has their own banking credit cards. And then we have like the Chase Sapphire credit card. Now, from a reward point standpoint, the Chase Sapphire card, to my knowledge, and from talking to other people, Chase Sapphire card has the best when it comes to travel points. So if you're looking to get a credit card just for travel so that you can not have to pay for travel, which we'll probably talk about 2 weeks as well, a Chase Sapphire card is the biggest bang for your buck, especially if you use their travel portal. It's called ultimaterewards.com, where you can use your points, buy either plane tickets, rental car, hotel, and they give you 2 to 5 times the points. So if I have 1,000 points, if I use them, then that is equivalent to having, 3,000 to 5,000 points. So if I have 100,000 points, right, then I can use that site rewards.com through Chase, and in my 100,000 points now turns into either 300,000 or 500,000 points. Literally with $500,000 points, that's like a week's worth of vacation, where the flight should be no cost because of the points, and also the hotel should be no cost. So literally, if you have 100,000 points through Chase, you do it through them, that's a no cost vacation for you for a week. So that's Experian, Chase, Amex, Bank of America, First National Bank, and then also Wells Fargo. So those are the ones that basically pull through Experian. And then we have Equifax, because again, it's 3 agencies and they all kind of pull from different places. So Citibank, Discover, BB&T, which is now Truist Bank, not all Truist, the platform that we cleared through, but Truist Bank, which is, BB&T, Truist Bank. And I would say, just from I'm not recommending them, right? Because I ain't recommending nobody, because we ain't get compensated for it. So I'm not recommending, but I would say out of all of the relationships I have, by far, Truist Bank has been the best. And again, I bank literally with 11 different banks, which we'll talk about why here shortly. There's small amounts in different banks, but why? But I would just say, like, the service that I get from Truist Bank, their branch, and maybe because I have a business account, they kind of know what I do, maybe, but like the support and the service I get from Truist Bank is better than all the other banks, and even credit unions. Like here locally, I'm in Jacksonville. I use VyStar Credit Union. I use Community First. And historically, credit unions are always better than banks. So when you want to bank somewhere, I would recommend looking at a credit union compared to a bank. A bank, their number one priority is the value of their stock, is their shareholders. Companies love you, but they love the shareholders and their stock price more. But credit unions, they are basically owned and operated by the members. So, they definitely take care of you more. So if you want to open up a bank account, it's always best to use a credit union compared to a bank. But I would say just from my experience with banks, Truist, which used to be BB&T Bank, now they're Truist Bank, I have a very, very pleasant experience with them. Again, not recommending them. It's not a promotion, not advertisement, paid or unpaid, but just in general. First Citizens, and then NASA Bank is Equifax, and then TransUnion. So TransUnion is Navy Federal. All the banks, Navy Federal, what I have seen is the easiest way to apply. They have it, pretty streamlined. Now, Navy Federal has been in the news lately because they have been denying minorities more than non-minorities, but whatever. They got to deal with, well, they had like a $28 billion lawsuit, so they got to deal with that to deal with. But still, Navy Federal credit cards has been a very easy process. In my opinion, Capital One, TransUnion, also soft pulls from Truist. It's not a hard pull like the other one though. Barclays Bank, Fifth Third Bank, and Synchrony. So all these banks have different ones that they pull from. And the reason why this is important because we want things on one inquiry, right? So if we have multiple banks that pull from the same, then we do it quickly, then it's only going to be one inquiry. But if we want to get multiple credit cards, then we would do 2 or 3 from things that pull from Equifax, 2 or 3 credit cards that pull from Experian, 2 or 3 credit cards that pull from Transamerica. And that allows us to do that credit card stacking, which we'll talk about in more detail. So So Experian, we had 2 questions in chat to kind of see it again. Experian, the major players are Chase, Amex, Bank of America, First National Bank, and Wells Fargo. Experian, Citibank, Discover, Truist, which is a hard pull, First Citizens, Bank of America, soft pull, and NASA, and then TransUnion, Navy Federal, Capital One, Truist, soft pull, Barclays, Fifth Third, and then Synchrony. Yeah, you guys can take screenshots of those. All right. So step by step. So applying for 3 credit cards at the same time using one bureau, right? So let's say Chase Sapphire card. So let's say, hey, I want to have a large purchase, or, I just want to just kind of increase and have kind of more credit limit wise. I'm going to use it. So again, when we say using credit cards, I'm not saying use this and then we're blowing all the money. What it's doing is to kind of have more money at our disposal if needed, if emergency happens, instead of pulling from your emergency savings account, pulling from a credit card, the ones especially that are 0% interest, which most credit cards, when you first do it, they do give you promotion of in between 6 months to 2 years. So that's another good thing as well. Like instead of pulling money out of my emergency savings account that I'll build back up in 5 or 6 months. So on the credit card, it's basically an interest-free account. So Chase Sapphire card, Navy Federal for TransUnion, and Citi Double Cash, right? So by applying for all those, even though it's 3 cards, applying at the same time, it is one pull from Experian, one from Trans, one from Equifax. And Experian doesn't know, even though you did a Chase card, they don't know that you did one with Citi, right? So they're not going to ding you for that because they don't know. TransUnion, if you do the Navy Federal, they don't know that you just went to Experian and did one with Chase. Like they don't know that. So it doesn't hurt you. So that's why you want to do the vertical method where we're kind of credit card stacking using the different agencies. So also, as I kind of segue, we want to make sure we have a banking relationship. And how do you do that? Now, when it comes to a credit card, I say before you apply, it should be a month's worth of work before we apply. The reason why is because, when we apply, they have credit limits. Well, the credit limits is based on a few things. The biggest is your FICO score. And we talked about how the FICO score is calculated. But also the bank looks at your relationship with them. So if I don't have a Navy Federal account per se, and I apply for a Navy Federal credit union, I might have a good FICO score. And, they might give me some money, but if the credit limit is 10,000 up to 10,000. They might just give me 3 or 4,000. The reason why, because they don't know you. They know you in a form of a FICO score, but they do not know you when it comes to the relationship. They don't know how much money you deposit to the account. They don't know how much money you take out the account. So they do not know. So we strongly recommend before we open up any credit card, we first have a relationship with that bank. Relationship with the bank, it doesn't mean you got to put in 1,000, tens of thousands of dollars within that account, but we do want to show some consistency. So what I recommend is that we open up an account and we deposit $100. Just deposit $100. And then the next week, and now you can do everything online now. So it's a lot easier just to link it up to your other bank accounts and then another week. So this shows that you have the activity of depositing money, not withdrawing. And then a week later, another $100. And then a week later, another $100. So basically $400. Now, once you get that credit card, you can take the money out if you need it. But just showing the bank that you have positive activity in the form of deposits, that goes a long way when it comes to the pre-approval, but then also, which we'll talk about here shortly, when you ask for a higher amount, because you can get a higher amount even if they give you one number. So whatever credit card that we do, it's always best to first have a relationship. So that's number one. Number two with a relationship, another thing that you want to do when you open up the credit card, go to the bank. Doing it online is automated. What you get is what you get. Now you can request for higher limit later within 90 days with no pool, which we'll talk about, but it's a computer. And the computer is not humans, right? So I always recommend when you open up a credit card, after you deposit the money, as we talked about, we go to the bank, actually ask for the manager or ask for a customer service agent to help you with the process, right? They'll ask questions. You'll talk about family. You'll talk about stuff. They'll get a liking to you, and then they'll do whatever they can to make your profile look better. I'm not saying it's bad, but they'll make your profile look better so that you can then be an opportunity to have a higher amount. So again, in closing, when we open up a credit card, we first want to open up an account with that bank or credit union and deposit money, $50 a week for a month or $100. Don't take out any money though. Now, once you get the credit card, you can take it out because they gave you the money. So it is what it is at that point from a credit limit standpoint. But we definitely want to do that so that we have a solid relationship, not a solid FICO score, but a solid FICO score and a solid relationship goes a longer way. And then also we want to ask for preferably the manager. The manager's not there. You can ask from the representatives. They'll be more than happy to help you, especially now because ain't nobody going to banks like they used to. Everything is automated. So people at the bank now, they say, yes, come in. Let me do something. Let me justify why I got a job. So yeah. More questions. This apply to personal cards, business cards. That is a great question. A person that asks a question. Both. So if it's a personal card or a business card, they both go to those same agencies, Equifax, Experian, and TransUnion. With best business cards, it is definitely important to have a relationship with the business person at the bank. So if we have a business, then we want to open up two. We want to open up a personal account if it's a new relationship. We also want to open up a business account, right? Because now we have a deeper relationship with them because not only am I giving you money from my personal, but also from my business as well. And that looks great on your profile when it comes to getting the highest limit possible. So yes, if we are getting a business card, I would recommend that you do personal with that bank and business. And again, do that, I would say a month before you actually apply for the card. Now, it doesn't have to be hundreds of thousands of dollars, even if it's $25. It just shows that you are open to have a relationship with them. And of course, they want to entice you with that credit card because their hopes are that you're just going to spend all that money, pay the minimum, and get charged all that interest rate, which of course, we're teaching y'all not going to do that. So, they want you to get a credit card. Every single bank, they want you to get as many credit cards as possible. And they're just wishing that you just pay it on the due date and you just pay the minimum and you pay them all types of interest. So if you got a good profile, you got a good relationship, and you got a credit score that's 720 or more, you're gonna get all the banks saying, "Come my way, give me all your money." The banks want that, right? Because that's how they make money. You think if they loan, $10,000 and they charge 17, let's say 20%, which is $2,000. I mean, they're making a lot of money. Think about if it's 1,000 people doing that. Banks make so much money on those individuals who have credit cards and just paying the minimum. They're making so much money. Now, again, with us, we're paying it off on a month-to-month basis, so you're not being charged any interest. But if you got a good profile, a good relationship, you're paying your things on time, you're gonna get a lot of banks coming your way saying, please open up an account with us. Another great question. So that's that. So again, um, then submit the application. We submit the application, I mean, they say yes, like the quicker that you submit an application, the better. But as long as you do it in 30 days. So again, we have the 30 days to kind of establish that relationship with the banks, and then 30 days to kind of start applying for those credit cards. Do not instantly update credit inquiries across bureaus. So the quicker that you do it, they don't see it. Again, that's kind of 1 hour. Yeah, as long as it's 30 days, right? If you wait too long, new inquiry may show up in a pack of approvals. That's the correct. If you do one, then do one 45 or 60 days later with a new bank, not for increasing your credit limit, which we'll talk about here shortly. But if you do one, then you do another one with a different bank with the same agency, 45, 60 days later, then yes, that might be affected. But if you do something within 30 days, you should be okay. But as I said, before we get to that point, we want to make sure we have that relationship already with the bank. When we get approval, so very, very important. When we get approval, we still want to stick by the utilization rule, right? So how to manage our new lines of credit. Well, we want to avoid maxing out new limits. So we want to use the 10% to 30% utilization. As we talked about before, the number one on the FICO score is your payment history. Number two, which is 30%. So out of 100% decision, 30% of that is your utilization rate, right? And to kind of go back with utilization, I know I talked about it a lot last time, but this is the point that people don't really get with their credit cards. You can get as many credit cards as you want. That doesn't matter. That is not a bad thing. What hurts you is utilization. So see it all the time. We help clients from financial planning standpoint. So part of that is, budgeting and kind of what cards you have. I got one credit card I use all the time. It has a $10,000 credit limit. I'm usually putting $8,000 on it, and then I just kind of pay it off. That is hurting you. Even though you're paying it on a month-to-month basis, probably not paying it off if it's $8,000. Maybe not, but that is hurting you, right? It's hurting you because you're being charged interest if you don't have it paid off past the statement date. So the statement date, they charge interest. The due date is when you get the fees for not paying. You want to pay things off before or after statement date. And you definitely want to get things paid off before or paid the minimum before the due date, so you're not charged any late penalties, what gets reported to FICO. So payment history. But the second is your utilization rate. So it's $10,000. I put $8,000 a month on it, or have a balance of $8,000. That's looked very, very bad. That means with your $10,000 of credit that we're giving you, you have to use $8,000 to $10,000 just to kind of pay bills and survive. That looks very, very bad. And even if you're paying it, it probably is decreasing your FICO score. So even though you're paying something on time, you don't have any late fees, because your utilization rate is so high, that is hurting your FICO score. So that's why I say you don't want to just have one credit card. You want to have multiple credit cards, and you have the credit limit and then your balance. And your balance needs to be less than 30%. If I got a $10,000 limit, my balance should always be less than 30%. When that happens, that looks very, very favorable with our FICO score, and that's what the banks like to see. So again, it allows us to pay our bills on time to increase our limits faster. So as we talked about, $10,000, more than $3,000, and we are paying things down, not on a monthly basis, on a weekly basis. Because if that was money that was first on our debit card, Once we pay it, it's leaving our bank account anyways. So there's no reason to have it on a credit card and keep a balance. I would say systematically you set up with the credit card company, link your bank account to the credit card and have that on every single Friday paid off. Pay off the balance. You click the button, pay. What do you want to pay? You want to pay the statement balance, the due date balance, the principal, or the current balance. You want to click current balance, and every single week it'll pay it off. That looks phenomenal on your FICO score because you're paying something down, you're decreasing the utilization rate, and it shows you have a positive payment history. That looks amazing with your credit. Also, request your limit increase after 3 to 6 months to boost your score. Now, I recommend you do two different things when it comes to boosting your credit limit. Once you apply for a card, you have 90 days to ask for that limit to be increased. And when you do that, that is not a pull on your credit card. So again, we do the credit stacking, use 3 different credit cards with one agency. Have let's say they had a credit limit of 12,000, you got 6,000. Right? After 40, in my opinion, I would say 45 days. The reason why I say 45 days, it gives you time to put money in the card. It gives you time to kind of pay it down and pay it off. So now they have history. So again, it's all about your profile. They see your FICO history is good because you have more than 720 credit score. You have a relationship with them because you've deposited money into that account, right? Their banking portion. And also you've put money on the card, lower than your utilization rate, and you paid it off. So it looks as if you have a very, very strong credit profile. So with all that in your favor, 45 days after you get the card, you then call and say, hey, the credit limit was $12,000. You only gave me $6,000. Because of our relationship, I want to increase this to $12,000. Will they increase it to $12,000? Perfectly, but they're going to increase it because you have shown them that you are responsible. Again, they want to give you as much money as they can. They just want you to be responsible so they're not got a default on you, right? So if we have 3 credit cards and they're $12,000 when we got 6 on each, 36,000 of available credit when we got 18. But by calling, and again, when we call within a 90-day time period, it is no extra inquiry. So it's not like an extra pull on your credit. So it's not going to hurt your credit in a negative way. By doing that, it's going to allow us to get more credit. So now, in all 3 cases, they might say, yes, we're going to give you the full amount. So you went from first having $18,000 of available credit. Now you have $36,000 of available credit. So if something happens, you need to kind of get extra money, or you want to use that money from an investment standpoint, buy real estate, buy something to help grow your business. You now have all this extra money that you did not have before, and it does not hurt your credit score because it's in that 90 days. And when you ask for a increase, that does not have a hard or a soft pull. So very, very important that we use that strategy. So even if we get a credit card for $10,000, it's only $1,000 they give us. It's okay. Put money on it, pay it off. And then after that, within 90 days, so it's not a pull on our credit, we then ask for them to review it and give you a higher limit. And then it works. All right. So we got another question come in. Is there a range? These are great questions, by the way, you guys. Is there a range on how much you should request to increase? I would just say increase to the max. I mean, there's no range, right? The worst question asked is the one that's not asked, right? And you get not received. So I would definitely say you just ask them, say, hey, I see here that the credit limit is 20,000. You gave me 10,000. I want the whole $20,000. So I would strongly recommend that you ask for the total amount. Now, will they give you the total amount? We don't know, right? But if you don't ask, how do you know if they're going to say yes or no? So that's a great question. And then you have a follow-up question, definitely you could ask. Do they pull credit? So it is a pull HELOC standpoint. If you want to increase it, because they basically are going to process again. If it's within those 90 days at the bank, same thing. No, it's not going to be a pull in your credit. But what is a pull in your credit? People get so afraid with that. Now, since you guys have the strategy, it really doesn't matter. When they have a pull in your credit, it's going to be in between 2 to 5 points. 10 at the most. So let's say it is a hard pull in your credit and your credit score goes down from 720 to 710. All right. Well, if we're doing the strategy that we talked about, you have 3 credit cards and you're paying things off on a week to week basis. For every credit card that you have, you should have an increase of 5 to 10 points per credit card. So worst case scenario in a month, if let's say if it's a 10 point, you go from 720 to 17. But if we're doing that strategy, worst case scenario, you're going to go from 710 to 725 because, again, getting 5 points on each card for the month, that's 15 points on the low end, 30 points on the high end. Or we go from 720 to 710 and 710 the next month to 740. So does it really matter? No, it doesn't. So I wouldn't be too afraid about, having a hard pull. Now, if we're doing it week by week, that's different. But, doing things like we're talking about, increasing your home equity line of credit, asking to increase your credit limit, I wouldn't worry about that because by utilizing the strategy that we're talking about, your credit score is going to be increasing so much, it's not going to hurt it. I mean, so yeah, I hope that answers you guys' questions. A lot of great questions, by the way. A lot of great questions. So a scenario, right? I always like to kind of show a scenario. So we have, all right, so John wants 15,000 in new credit cards, but doesn't want 3 hard inquiries on bureau. Instead of applying for 3 cards for the same bank, he does this. And I'm actually going to give you guys, I mean, this is an example. I'm going to give you guys a client of mine, we won't say a name, of course, they don't live in Florida, but I got clients in 35 states now. But have a client that actually lives in Arizona. She owed, I think, like $25,000 in taxes. And you guys know with taxes, they get 2 different ways. They get you on penalties and on interest. Basically, between penalties and interest, it's basically 30%, which is highway robbery, but whatever. So for every $10,000 she owed, they was charging $3,000. So even though it was $25,000 that she owed, she was basically paying an additional $7,500 in interest and penalties a year, right? So I think we started this in July, and she got everything up going in September. So it was like a 3-month process to get everything going. What we did was we actually used these 3 cards. Chase and Chase pools of Experian, and the Chase Sapphire card, the limit is 48,000. She was able to get I think 25,000, right? So she got approved 25,000, and then she actually banked with Navy Federal already. So she banked with Navy Federal. That pools with TransUnion, $7,000. She the first time only got $5,000 though, so she got $5,000. Again, we used the strategy. She called, and then they increased that $7,000. And then Citi, the Citi Custom Cash, which is great. If you guys are have a business, they give you 3x points back if you do marketing. They have a program with Facebook, so if you guys do like Facebook ads or Instagram ads, Citibank is good for that. This person, it was a W-2 employee, but still, just in general, right? She was able to get 16,000. So between those cards, her basically owing the IRS again 26,000. We basically pulled $9,000 off of each card. $9,000 off the. I'm sorry, did 13,000 off the Chase. She did 5,000 off of the Navy Federal because again, utilization rate, right? We want to keep that utilization rate down. So she did Chase. She did Navy, and then of course she did the other 10,000 with the Citi because of the limit. She got the full limit of 40, but again she only took 10. So now by pulling that cash off the card, that is $27,000. So what did she do? She took that $27,000 in cash and she paid the IRS. Now she still owes $27,000. It's like not like the money goes away, but because in all 3 instances they were 0% for 18 months, it gave her a whole year of not paying the IRS $7,500 of interest. So that saved her $7,500 of interest. So now will she get them all paid off within the next 18 months? We don't know. What we're going to do in month 16, 2 months before, we're going to look at the balances and then do it all over again with different cards and have her go through the same process, whatever's left. So she can do another 0% interest for the next 18 months. So the thought process is when that happens, she'll have no interest or payment for 36 months and she'll be charged interest at all. But with the IRS, it was scheduled for her to pay for the next 4 years. So you think about, 7,500, then the next year, 5,000, the next year, 3,500. You're talking about literally about $15,000 of money over 4 years of interest. It's money, but it's interest, not principal, that she was going to have to pay the IRS that she did not use in this real life example. So again, very, very important when we apply for credit cards, we don't do it all with one bureau. We do it with different bureaus, and we use the credit stacking method as we just talked about. All right, so more questions. Can you give an example of this? That is, so yeah, I'll give one example. So we're going to talk about that in more detail in 2 weeks about how to, because it's a system. But as a business, I'll just kind of give it very, very easy as a business owner, right? If I'm a business owner, I of course could pay myself via payroll, right? Now I use paychecks because my wife, she hasn't worked over 10, 15, almost 15 years. Okay. But when she did work, what moved us here to Jacksonville, we both got out of college. She got a job with paychecks. So my payroll was like $2 every pay period when it should be like a couple $100. So I use paychecks. ADP has a program where you can pay your payroll. You can pay your payroll using a credit card, and you can either use it through a company called Plastiq, Plastiq, or you can use it through Zelle Money. So those are the two where you hook up your credit card, they'll take your credit card, use it as cash, and they'll pay your payroll that way, right? So how can we take money off a card? Well, if we link that card to either Plastiq or Zelle Money through ADP, you pay yourself the payroll. So now let's say if it's you pay yourself $5,000 a bonus, right? That $5,000 goes from the credit card to you as cash, right? So that's how we do it. So we're pulling the money off. Legally, we ain't doing no funny business. So we take the money, or it's Plastiq, Plastiq. They popped it in. Thank you. So by pulling the money, it's to you for payroll, right? So if you pay yourself payroll already, if you use another carrier, then you can decrease. So let's say you say, hey, I want to pay myself $50,000 a year. Well, you just decrease what you're paying yourself month to month. So you're not paying extra taxes, right? So you still have that $50,000, but now that cash that you couldn't take on that card initially, it comes to you as cash, and that's how you pull cash. It's 3 different ways. Legally, there's other ways that people do, like they take stuff and get a refund, put on another card. I think that's immoral. I ain't talking about that. I'm talking about legal ways you can do it. But that's one as a business owner. The other two, we'll talk more in detail in 2 weeks. But again, for a business owner, we use either Plastiq or Zelle, pay ourselves via payroll, and there you go. So I hope that Trey, the person who asked that question, are you a business owner, or are you a personal, or are you talking about your personal card? The person that asked that question. How can you manage your credit card to pay your mortgage and build points? Great question. So I'm gonna answer the question. I'm gonna give my recommendations. So yes, you can use your credit card to pay your mortgage, and then how you can use Zelle or Plastiq to do that, because they basically pay payments, right? So you can use them. However, when you pay your mortgage, those companies, they charge a fee, and that fee is anywhere between 3 to 5%. Now, it's better than doing like a cash purchase or cash advance, because most companies charge anywhere between 10 to 20%. So let's say I want to pull $10,000 directly off my card. A cash purchase, if it's $10,000, they're going to charge you $1,000 to $2,000, right? 10 to 20%. Or you can do a balance transfer. Most balance transfers are 25%. So if I want to do a balance transfer of $10,000 from one credit card to another, they're going to charge me $2,500 just to transfer the balance. So pulling money off the card, like I talked about as a business owner, it's a great way to do it without those high fees. Yes, you're paying in between 3 to 5% to process it, but you're not paying 10 to 15, 20%. When it comes to your mortgage, if you pay that out of your bank account, it is no fee, right? It is no 3 or 5% fee. So let's say our mortgage is $30,000 a year. We're paying 20, not including escrow, all that type of stuff. we're paying $2,500 a month, which is $30,000 a year. Well, that's $30,000 a year. If we do it from the credit card, then it's $30,000 that you're paying your mortgage company, but then also you're paying either Zelle or Plastique that 5%, which in this case is $1,500. Now, $1,500 doesn't seem like a lot, but we're talking about a 30-year mortgage. Or if you guys use my strategy, you should have a 30-year mortgage paid down in 20 years by paying two payments a month instead of one payment a month, and then also making an extra payment throughout the year. You do those two things alone, you go from a 30-year mortgage to a 20-year mortgage, just those alone. But you think about over 20 years, we're paying $1,500 a month. That adds up. That's over $30,000. I mean, $30,000, if that's invested over a 20-year time period with compounding interest, you're talking about in between 60,000 to 100,000, depending on how the money's invested. So yes, you can use Plastique and Zelle to have the cash sent to you, and then you pay the mortgage for points. But I wouldn't recommend that because of the processing fees, and again with compounding interest over time, that money could just stay in your pocket, be invested in. And so I hope that answers the question. That is a great question, though. So you can do it. I just wouldn't recommend it. And the more questions that you guys have, the better. So yes, that's an example which we talked about. So the results. So by doing that, my client I talked about, West, she got 3 approvals, but only 1 inquiry per bureau, right? Even though she did 3 different ones, it's not 3, it's only 1 per bureau, which looks good. And then example, John minimized his credit score drop and secured 16,000 credit. Maxwell client, she got 27,000 and she saved herself literally over a 4-year time period if we continue to use the strategy at the end of next year, another 18 months over with the interest free for 18 months. She's going to literally save $15,000 of interest payments that the IRS would have got. That's real money, right? So in 4 years, instead of her bank account being 30,000, it's going to be 1,000. That is real money. So you might have a payment of 15 or 20%. You might have a car payment that's 10%. You might have anything over 10%. We want to use this strategy so we can get things paid off quicker and also have more money in our pocket. So why the strategy works: prevents multiple inquiries on a single credit. It maximizes approvals before new inquiries show up, as I talked about. It works great with credit stacking, which we're talking about now, applying for multiple lines of credit at once. You can do this at banks as well, right? So again, if you want to get different things at banks, right? Banks offer different programs. You can do this for credit cards and banks as well. You just want to find out which bureaus the banks use. So you can do this with credit cards and banks as well. Also protects your credit score from excessive hard inquiries, and you still get funded. So tip number 1, use a pre-qualification tool. Amex, Capital One, Discover, they allow you to do pre-qualification. That's a tip. But as I said, having a relationship with the bank, putting in the small deposits over the course of a month, and then going to the actual bank, that will help. Yes, you're being pre-qualified, but they still go through the whole process. But if you have a relationship, you look better than a person that does a pre-qualification. So tip number 2, freeze 1 or 2 credit bureaus before applying to force banks to pull from a different credit bureau. That is true. Now, we know which banks pull from what, but if you want to be extra litigious and just kind of extra, you can definitely say, hey, I want to freeze anything. And you can do this using LifeLock. So again, I'm not promoting LifeLock. This is not a paid or unpaid advertisement. We use LifeLock, and you can definitely freeze the credit bureaus to kind of do one in 90 days, unfreeze it, do another in 90 days. Now, of course, that's a longer process. That's half a year to get your credit cards, but you can do that if you want to be just safe and sound with a bank pulling from a different bureau that they usually don't. Number 3, you want to apply for business cards at the same time. Many do not report personal credit, but still provide funding. As I talked about, the person asked the question, if you have any business account, I recommend you always do business and personal at the same time, because again, it's one inquiry. So if we are going to do this with 3 different banks, now we're really pulling 6 different cards, right? 1 personal, 1 credit at one bank, 1 personal, 1 credit at another bank, one person, one credit at the third bank, 6 different times, but you only get that one pool. So if we have a business, even if we don't need business funding, because you never know, and things are going good right now, I'm not saying it's going to be a recession, but if it is, it's good to have that than not have it and then try to get it during the tough time in America. So if we have business, I would strongly recommend when you do a personal card, apply for the business card. When you get the money, don't blow through it. Don't blow through it, but at least you have it. So if you want the replay, I think it gets sent out automatically. Just text us our office. We'll make sure we send it out to you. But for most individuals, you should get this replay text to you automatically. Another good question. All right, let's see here. I think we are coming down to the end. Okay, yeah, making 2 payments. So making 2 payments per month can trick the system into reporting low utilization. Yeah, you can make 2 payments, but we want to trick them as much as possible. So I would say make 4 payments every single week. And with automation, it's very easy. All credit cards allow you to pay whenever you want to, however you want to. You can set up automatically. I would say I do every Friday. That's what we do. Me and my wife, we do every Friday. Now, she's definitely run up the credit card a lot more than I am, on the personal side at least. But yeah, we set it up every Friday. So how it works, pay half the balance before the statement date. You can do that, but if you do week to week, that doesn't matter. It's done weekly. You pay the remaining balance after the statement date before the due date. Now, this is a okay strategy, but unless you pay it all off, you're going to be charged interest. So if you say, hey, I don't want to set it up week to week, or I get paid on the 1st and 15th, so I'd rather do it month by month. We probably want to have a conversation because we want to make it where you are getting the biggest bang for your buck from a credit history standpoint, but you're not being charged interest. And if you have a balance after the statement day, you're going to be charged interest. Even though you pay it down or pay a minimum before the due date, you're not charged a penalty, but you're still being charged interest. So if you can't do it week by week, let's have a conversation to see how we can structure that, because we don't want you to pay interest. Because if you're paying interest, then you defeat the point. It's like, well, why just keep it on your debit card? Because with your debit card, you're not being paid interest. They're not charging you interest. So we don't want you to get to the habit where you have credit cards and you're struggling to pay them, now you're being charged interest. That defeats the purpose. So that's why you want to do it week by week so that you won't have that. So coming down to the last few slides, another example. I know I talk about utilization a lot, but this is what people just don't realize with credit cards. If I got a credit limit of 10,000, I got a balance of 5,000. That's too high. 30% or less. So then I should pay 3,000 before the statement. Then before the due date, now support for $2,000. So my utilization rate is low. So that is how we decrease our utilization rate. But in this scenario, I did this on purpose because this is a correct scenario. But in this scenario, guess what? You are still paying interest because you still have a balance on your credit card after the statement date. So that $2,000, that looks good from a utilization standpoint, but that does not look good for your pockets because you're paying interest. So if it's a 20% interest card, $2,000 on 20% is $400. If you annualize that, that's only $30, but it's $30 a month that we don't have to pay if we don't have to. So the better way to do this is to have 2 credit cards at $10,000 and put $2,500 on each card. So now both those cards are under that $3,000 number or that 30% utilization rate, and paying week by week and having those cards paid off so that we're not having to worry about it being paid on the due date. Is paid before the statement date or on the statement date, so we're not charged any interest. We don't want to keep charges if we don't want to. All right, cool. I think last thing. Oh, any questions? Haha, that was quick. Okay, we went through these quickly then. What questions do we have for me? And let me check my direct messages. Stop share. Let me check my DMs. Okay. Oh, I got 3 or 4 direct. My bad, you guys. All right. So, question: how much could I possibly get? So I think I answered before. Whatever the credit limit is, I would say ask for that, right? So it shouldn't be like I can get up to $40,000. I just want 10. No, you want to get as much credit as you possibly can. It does not mean that you're going to use it. So having it and using it is 2 different things. And what gets people in trouble is that they say, hey, I got this extra money. Let me just put it on the credit card and kind of pay it off, right? But if that's not the sequence of your daily or weekly spending, why do it? So just because you have the credit doesn't mean you need to use it. And I always say you want to apply for as much as possible. Another question. Um, do we have to go to the bank? Everything is easier out of it. It must be a younger person to ask that question. So do you have to go to the bank? No, no, you do not have to go to the bank. But if you want to set yourself up for the best opportunity to get the highest limit possible, then you want to go to the bank, because having a conversation with a person at the bank, either be the manager, a customer service rep, it's a way pleasant conversation. You know, you're going to get more favoritism that way than doing it on a computer where they don't know who you are. Take a step further, you really want to have a relationship first. So you open up an account, deposit small amounts over a month, and then you then go into the bank. Is it better to apply for HELOC from the company that holds your mortgage or another institution? That is a great question. I would just say, again, do both, right? So let's say we have our stuff at Rocket Mortgage. You know, you want to, talk to them and see, well, first off, you want to see who pulls from what, right? So whatever companies that you're looking for, what do they pull from? So we can make sure that we're doing the stacking, right? So let's say Rocket our mortgage we're using them, not a promotion. I know we use Rocket Mortgage for our house. So I don't know what Rocket Mortgage pulls from either. I'm just saying, let's say they pull from TransUnion, right? And then Navy, because this person lives in Jacksonville, Navy Federal pulls from Equifax as TransUnion and as Equifax. Because you're not going to get two pools, right? You're going to get one for each. And again, they don't know what each is doing. And whoever gives you the best rate, or whoever gives you the most equity, because again, HELOC is basically equities. Rocket Mortgage might say, well, you have $50,000 of equity. Maybe Federal might say, well, it's 100,000. We have a different appraisal because your neighborhood, you have 100,000. Well, of course, it's more money. You want to then use Navy Federal. So I would actually say use two or three. But you want to go through the process first before you do it. Make sure you have a relationship with them, right? So you have an account open with them already. If not, then open up an account, do week by week for a month. Then after that, when you go in, well, for a HELOC, you have to go into the bank. You can't do that online. But then when you go in, set some time with the manager or one of the representatives and kind of go through that way. But I would actually say use all three ones we talked about from an agency standpoint and see. And you'd be surprised too, right? It's like one gave me 50,000, one gave me 40,000, one gave me 100,000. What is your bank ain't y'all the same? But they have different rating systems, they have different appraisers, so it's definitely different. But I would say the three different agencies you want to try. All right, so we'll come up on 1:30. It's 1:25. We want to be respectful of everybody's time. So I'll know, Christian, if not for the Lord, we would not be here. So I like to always lead us out in prayer. So we can all just close our eyes and bow our heads as we pray. Dear Lord, thank you for your love. Thank you for all your blessings. You continue to be in our lives. Thank you for blessing the people on the call. Thank you for allowing us to be healthy enough to be on the call, as people cannot even be on the call and listen, walk, or talk. May you bless us. May you bless our friends. May you bless our family. May you bless our finances. May you bless our health and our well-being. In Jesus' name we pray. Thank you for all your continued blessings you bless upon us. Amen. God bless.